Welcome everyone to Home Team's Smart Living Report, because there are so many things they just don't tell you. I'm your host, Ann Zeev with Keller Williams Success Realty in South Ogden and the Northern Utah Home Team. I'm so excited about today's guest. You're going to learn so much. I know that getting a loan on a home can be an intimidating and overwhelming process. There are so many confusing terms thrown around. Well, mortgage broker Ron Pippin is the perfect person to make this complex process and simplify it for you, which is exactly what you can expect today. After working on the Space Shuttle solid rocket program for 10 years, Ron decided in 1995 to jump out of the engineering program and into the financial world of mortgage lending. Over the last 18 years, Ron has owned his own mortgage company, founded and sold a debt management company, and has been a guest instructor at Weber State University, Cornerstone Financial, and a national marketing group. Ron currently is a continuing education instructor for the state of Utah and branch manager for Guaranteed Rate. Welcome, Ron Pippin.
Thank you. It's good to be here.
Well, we're glad to have you, Ron. So before we get started, I do have to remind everyone that we'll have a special offer just for our listeners at the end of the interview. So stay tuned. I also have to say that I've never actually met a real rocket scientist before I started working with you, Ron. What an exciting career. What made you make a change to financial businesses?
Well, I can't say that I was actually a rocket scientist, but I did work in the engineering department out on the rocket booster program. I think that my dad always told me that if I ever got to the point where I got up in the morning and I just hated to go to work, then it was time to change jobs. And so probably the last 2 or 3 years I was working on that program. That's about the point I was at. And so I just started looking around and trying to figure out what I wanted to do. And mortgages seemed to be a big deviation from where I was at. But, I've always been into accounting. Actually, that was the first degree I was going into, was accounting. And that was something I did want to do. But, mortgages just seemed right down my alley, and I enjoyed working with people. So that's kind of where I ended up, and that's where I am today.
Well, great. And lots of buyers have benefited from you making that switch for sure. So, Ron, in my mind, one of the most important distinctions is the difference between a pre-qualification and a pre-approval. Can you elaborate on the difference for us?
Sure. A pre-qualification and a pre-approval differs in really the amount of information that we're getting. A lot of lenders will write a pre-qualification letter and not verify anything. I've even seen them where they haven't even pulled a credit report. And I don't think that helps anybody, because we don't really know if they can qualify. So when you call it a pre-qualification letter, that's really a pre-qualification letter. But a pre-qualification letter really is, you'll pull a credit report, and that's about all you'll get is a credit report. You haven't verified the income or any of that kind of information. A pre-approval will actually go a little deeper. We'll verify their income. We'll gather pay stubs or tax returns or bank statements, some of those things, to make sure that their income is what they say it is. And then we also run it through what's called an automated underwriting system that tells us whether that loan can be approved or not. And so a pre-qualification, there's a big difference between a pre-qualification and a pre-approval letter, in that a pre-approval is just so much stronger than a pre-qualification.
Okay, great. So that's a simple way to see the difference. The pre-approval process sounds like a lot of work for you, though. What do you charge for that?
Well, I used to work at a bank where they would charge that. They would charge anywhere from $50 to $200. I've seen lenders that charge as much as $200 to go through the pre-qualification. They charge upfront application fees or charge upfront for credit reports or other things. And I just don't do that. I just think it's my job to help people get into homes as quickly and as easy as possible.
Very good. Well, Ron, that's one reason why many of our buyers end up working with you. A lot of buyers are afraid to get pre-approved, though, because they think it'll ding their credit or expire before they find a home. Yet I know a seller will take their offer a lot more serious if they are pre-approved first. So are these major downsides to get pre-approved? Does it ding their credit or?
Well, a credit report, yeah, sure. Yes, it does. When you pull a credit report, their credit score will drop maybe 5 points, but it's really temporary. It's probably maybe 30 days and their credit score is right back up to where it used to be. But when you look at that, the downside to not being pre-qualified or pre-approved is so much greater than the small drop in credit score. If you're looking at homes that are $250,000, only to find out later that you can qualify only for $150,000, there's a big difference between $150,000 and $250,000 homes. So that buyer is going to be really, really disappointed. Most real estate agents also won't even put you in their car to go look at homes until they know, one, whether you can qualify, and two, for how much, because just so they're not going to be disappointed. And also there are some there are some sellers that won't even let you come and look at their home until they know you've been qualified, just simply because they don't want people just wandering through their house that can't buy their home.
Yep, and all of that is absolutely true for sure. So awesome, thank you. Another question I get often is, how much is needed for a down payment to buy a home?
Boy, that really depends on what kind of financing we're looking at. So really quickly, here's a quick summary. FHA is going to require 3.5%. Conventional is going to require 5% down. However, there's multiple programs that require no down payment. For example, there's a first-time homebuyer program that requires no money down. There's also a program for those that have owned a home before that you can get in with no money down. There's also programs like VA for veterans and rural housing programs if you're living in an area that's considered rural that don't require any money down. So having a down payment will help reduce your payment. However, in many cases, not having a down payment is no longer a barrier to buying a home.
Okay, well that's a good summary, thank you. So let's talk about closing costs then. What exactly are they, and how much are they, and who pays for them?
All right, well this really could be a lengthy discussion, but I'm going to try and keep it as short as I can. What are closing costs? Closing costs are incurred when you're obtaining a loan, and some of these costs are going to be things like an appraisal, which tells us the value of the home. You're going to have a title policy, which tells us who owns the property and what liens are against the property, and it's also going to ensure clear title. You have credit reports and underwriting and other costs on obtaining that loan. So who pays for those? Well, it could be the seller and it could be the buyer. And oftentimes a seller will participate in the closing costs. But the problem is, we just talked about some no down payment programs, and so there are some buyers that actually don't have the money to buy or to put down for a down payment, let alone closing costs. So if the seller doesn't at least participate in paying for some of those, they may have to move on to another home.
Yeah, I have sellers who get mad every time a buyer asks the seller to pay for the buyer's closing costs. So from your experience, do most buyers really need this financial assistance, or are they just trying to get as much as they can from the seller?
Well, another thing my dad also told me was, if you don't ask, you don't get. So sure, are they trying to get the best deal they can? Sure, I'm sure some of them are. But as I said, that if the sellers don't participate in the down payment, in the closing costs, then there are often times that there are some buyers that can't pay for those, so they'll have to move on to another home. So in this market, normally sellers are at least participating. If they're not paying all the closing costs, they're paying at least some of them.
And that's always a good compromise, is to split them or contribute part of them. Great. Well, before I forget, let me tell everyone how they can reach you, Ron. Ron's phone number is 801-628-7667. And he can be reached at ron.pippin, which is PIPPIN, at guaranteedrate.com. Also at www.guaranteedrate.com/Ron Pippin. So Ron, here's a question that I don't think I've ever fully understood. Why do closing costs and interest rates differ from lender to lender?
Well, that's a great question. First, I'll address the costs. Just about all lenders have their own lender fees that help cover the cost of things like processing and underwriting and preparing the paperwork and other costs. So lenders have great latitude in what they can charge, and I've seen these fees vary anywhere from $800 to $900 up to several $1,000s. Then there's the origination fees. Standard in the industry is about 1% of the loan amount. I've seen some credit unions and some lenders reduce this to about 0.5%. So in most cases, I don't charge any. So on a $200,000 loan, that fee alone can be about $2,000. So there's a big savings there. Now, as far as interest rates can vary because lenders, part of what the lender makes is in the interest rate. I happen to work for a company where the level of management is very, very thin. As a branch manager, I report to a regional manager who reports to the CEO. So you can see there's just very few layers of management.
Wow.
When you have very few layers of management, your overhead costs go way down,
Sure.
which helps keep your rates down. So I worked at a bank where the layers of management was much thicker, and so there was a lot more overhead to cover. So they have to cover their overhead some way, and unfortunately some of it do it with a little bit higher rate.
Okay, great. So let's talk about the process of getting a loan. At a simple high level, what does this process look like? And in this digital age, how much can a buyer do without ever coming to see you?
Again, this is a question that could take a lot of time, but I'll try to be as brief as possible. After getting pre-approved and finding a home, the loan process really then starts. However, hopefully we have already gathered some information from the buyer to help make the process a little smoother. Things like 2 years tax returns and some W-2s and some 1099s and other supporting documents, maybe a full month of pay stubs. Those are things that are going to be needed. So if we have those up front, it makes it go a little faster. But once the offer is made, we then prepare the preliminary paperwork for signatures. This is the loan application that needs signed with the property address, along with a bunch of other federal required disclosures. There's a big thick stack of paperwork that people have to sign, unfortunately. So some of the process includes verifying employment and ordering an appraisal and title work and insurance binders. There's really a lot of verifications we have to do that to make a mortgage loan happen. As far as what can be done without a meeting, I have clients that I've actually never met. We have a process where on some of our loans we can digitally sign them on the computer. So everything can be done through emails and through faxes and through digital signatures. So in this day and age, you don't really have to meet. Although I know a lot of people like to still meet with me, so we can go through the process, and so we can shake hands and look, face to face.
Right.
And a lot of people still like that, so that's okay. We can do it either way.
Okay, great. So, what is the average turnaround for a loan to be approved once the application is submitted?
Well, that actually again makes a difference as to what kind of loan that we are providing. For example, a VA appraisal can take 10 days just to be completed, where a conventional appraisal can take 3 or 4 days. So there's a lot of delays that can happen, such as an employer is not getting us verification back of employment in time, or maybe even the borrower is delaying getting us some paperwork. If everything goes really, really well and there's no hitches, then we could get everything done in a couple weeks. But you can expect a normal processing time to be anywhere from about 3 to 5 weeks.
Okay, great. That will help the buyer and sellers to have realistic expectations for sure of what a process time is likely to be. Now, it's not all roses and ice cream all the time. I know from experience that things can and do go wrong. So what kind of things can go wrong, and what do you do to help prevent them?
Well, there's a lot of things that can go wrong, and hopefully, I'll tell people not to go change jobs in the middle of the process,
Yes.
Go buy a car, or people get excited and they go buy furniture from their house before we close. That can actually delay or cause some issues in the processing. I had somebody that we were doing a verification of employment, and a lot of employers use verification services, and the verification service actually had the wrong information.
Oh, no.
And so it's taken us about 2 weeks just to get the right information. So there are delays that can happen. Some things are out of our control, and we try to deal with them the best we can. But hopefully just through a good communication with you and with the buyer, that we can get most of them taken care of.
And I think the key is that you're proactive and you educate your buyers, so you help ensure that things that might go wrong remain small. So
I hope so too.
Yeah, right. That's the goal.
Yeah.
So let me ask you this, since I hear it a lot from the buyers. How do I know what my interest rate's going to be on my loan?
The interest rate really can change daily in the market, because interest rates, loans are sold on the stock or on the market just like stocks are, and so they can change on a daily basis. So until you lock in your interest rate, you're floating with that market. And normally you can't lock in an interest rate until you have a property. And so once that happens, you can lock in your interest rate. However, I do have a program called Lock and Roll, where we can actually lock in your interest. I know, isn't that funny? Lock and Roll.
Yeah.
Whoever came up with that thought it was really funny too. But it's Lock and Roll, and what it allows us to do is actually lock in your interest rate before a property is found. So right now in this market, the interest rates have been going up, so it locks in that interest rate before rates go up. And I also have a program that allows us to float down, just in case the interest rates, we lock it in and the interest rates come down, we can float it down too. So we can lock it in, and most of the time with most lenders, you throw away the key and that's your lock rate, but we have some options to help you out.
Wow, that's great. So I guess related to that question is, how do credit scores affect the interest rate that a buyer gets?
Boy, everything always depends, doesn't it? I have a lot of depends questions here. So again, it depends on the loan. But generally speaking, the better your credit, the better your interest rate. For example, on a conventional loan, if your credit score is 740 or better, then you're in the highest tier. Of course, it does depend on the loan program. For example, the first-time homebuyer program requires a 660 credit score, and it doesn't matter if your score is 800 or 660, you get the same interest rate. So really, it just depends on the type of loan program.
Okay. Well, wow, this has been so amazing. I've got a ton of notes thanks to you, Ron. I think it's so important for someone to work with a lender who actually keeps the buyer's goals ahead of everything else. It's that focus that sets you above the crowd for your knowledge and experience.
You know, you just mentioned focus, and I think that's really important in any profession. When I was introduced to you and to Joel, I had something that really, really impressed me. It was a 57-point marketing plan where you sell in half the time and for 4% more compared to the average realtor. And that was really impressive to me, because when I've worked with other realtors, boy, most of them don't have a plan other than putting it on the MLS and hope. And my dad always told me that hope was a really bad business strategy. So it was really, really refreshing to find somebody that had the focus that you and your team have put into play. So I appreciate that.
Well, I appreciate you saying that, Ron. Thank you. And we appreciate the time you've given us for this overview of the lending process. There's so many questions, and I see how you're able to help people get into a home loan that meets their goals. So 2 important things before we go. We'll give everyone your contact information again, and then we'll talk about the special offer you have for our listeners. So where can our listeners contact you for more information, Ron?
Well, they can call or text me. My cell phone number is 801-628-7667. Email is ron.pippin, that's Pippin, @guaranteedrate.com. And you can reach me at www.guaranteedrate.com/Ron Pippin.
Great. So now for our special offer. Anyone who mentions this show when contacting Ron will get a $100 gift certificate to Lowe's or Home Depot when they close on their home and loan with us and Ron. What a way to treat your home to some new decor or repairs. Ron, that's an awesome offer. Thank you so much.
Oh, I'm glad to offer it. Thanks for having me, Ann.
Well, it's been very educational and well worth the time, as I'm sure our listeners will agree. So as a final note, remember that I'm in the real estate business, so if you know someone who's looking to buy, sell, or invest, please consider referring them to me. They can leverage the knowledge I have from personally owning over 170 homes since 2002. Feel free to contact me at 801-695-7787 or Ann, which is ANN, at northernutahhometeam.com. If you want a transcript of this program, just let me know. Again, my number is 801-695-7787 or Ann, ANN, at northernutahhometeam.com. Until next time, keep living smart.